specific to talk about, really. I'm streaming it, that's why. Ah, there you go. It's music. Oh, I like the music. Ready to rock and roll. Good morning. How you doing? Welcome everybody to a lovely sunny day in Vancouver, British Columbia, Canada. And all good. How was your week? We are multilingual. That's it. That's what we're doing. Yeah. That's a good idea. Yeah. And I think that's a very well thought out plan from you. It takes time to grasp all this. And I know sometimes when I talk and I just go off and you make sense when I say it, then you walk away and go, what the fuck did he say again now? What is this? Right? It's hard to comprehend. And that's why repetition, that's why continually doing it, that's why doing it where risk is low, right? That's a good idea. There's nothing wrong with that. And I think, that's good for everybody to kind of think about that, right? And just really kind of realize that this is a journey.
This is your
Right? This is a journey, and journeys take time. You know, I've been doing this over 16 years. It's a long time. Even now, people say to me, "Oh, well, you're lucky you know everything." I don't know everything. Oh my God! Even I make mistakes. Even now, after all those years, I still make mistakes. This is ongoing. You never ever stop learning. This is constant.
That's true.
And you know, I maybe have a little bit of a swagger, a little bit of a cockiness, confidence, whatever you want to call it, arrogance, whatever you want to call it, doesn't matter. So I go in, I go, yeah, this is what I'm looking at. Yeah, I'm looking at this, look at this. Well, why aren't you looking at that? Why, it doesn't matter. And an interesting question came up for a client of mine. Asked the question. They said, I noticed one thing.
Yeah.
I said, oh, yeah, what's that? He said, we talk, I send you my questions, you send me stuff. When we have our sessions, you discuss things, you talk about macro, you talk about fundamentals. But, you don't really pay attention to it. I go, okay. So he said, so I'm not really understanding why you talk about it. I said, all right, okay. Now let's just kind of like put that in perspective here. So I always say things are temporary, right? When you get the central banks, the fundamentals, all that stuff is already told to you from the beginning. You're already given, this is what we expect, this is what we're looking at. We only trade if there is an anomaly. Do you know what I mean by that?
We only trade if there's an anomaly.
Yes.
Why would you only trade on
Because the
anomalies?
market's already built in the fact that, let's just say, for example, there is a number coming out about something that's important, and it
Yeah.
doesn't matter what that something is,
Uh-huh.
right? And let's say they are forecasting the number 25. Okay? And previous months have been 24, 23, 25, have been around that area,
Yeah.
right? So if it comes in at 25,
Then that's good. It's
we
expected. It's normal.
yeah, we
Yeah.
already know. We're okay.
That's
But
okay.
what if it comes at 19?
Yeah. Oh, that means
What if it comes at 30? Right?
that's an
Start to
anomaly.
see. Yes,
Yeah.
yes. Now, the stuff beforehand with what are the central banks trying to achieve? What is the monetary policy trying to achieve? What do the Feds want? What is going on macro? What's driving the market? I'm going to ask you this question. What is driving the market right now, Isaac? What do you think is driving the market?
The fight, the Trump versus Powell fight, and I guess tariffs, Trump's administration tariffs, and yeah, just those.
Okay, so what's the common denominator there?
Trump.
There you go. That
Trump
is who's,
Inc.
yeah, Trumponomics
Yeah.
is driving,
Donald.
is the macro driver of the market at this moment. Why is that? Because I should backtrack. I should backtrack here because I want to say, no, actually, I'll finish. Because everybody is like, what's going on? What's he doing? Is there tariffs? Is there not tariffs? Is he talking to China? Is he not talking to China? He lies. He gets caught up in his lies, right? And people are going, what the fuck? There's no confidence. So he says this, and then tomorrow he says that. So everybody's totally confused. There's chaos. There's confusion.
Yeah.
There's uncertainty.
Uncertainty
right?
is the word. Yeah.
Right. That's the word, right? So what do? We have to be careful what he says because we can trade what he says, but then also be careful that that may change tomorrow, right? So the macro, like right now with the stocks going down, the macro driver that should be moving the market is the bond market, the treasury market, but it's not. It's also coming down. There's also something that things are off.
Yeah. Something's
Right?
Something's weird.
Things are not. Yeah, the market goes a certain way and does a certain thing, and there's a correlation and stuff like this. And if this happens, this happened. The only constant, the only thing that was yes, was gold.
Gold. Yeah.
And why did it make such a big resurgence? Because everyone's not
Everyone.
confident, so they go, I'm going to gold. So what happened with gold? Well, we went over gold last week and we talked about levels and stuff like that. And I said I wasn't trading up, right? Because there's a reason why I wasn't trading up. And it went up quite a bit, right? It did go up quite a bit. And then what did it do?
Yeah.
So needless to say, ask me what trades I made last week.
What trades do you do? Gold.
I was selling gold. And we can look at the charts, and this is not to brag. Oh, wait, maybe a little bit.
No, Wait, before we do that, I have a question, because I think you touched a really good point saying, how do you use fundamentals? I know, like, we always talk about fundamentals. You always say we need to understand the what moves the market, the data that is shown, what is being forecast. So, and then you said this word that is new to me, the anomaly. Like, you only trade anomalies. So that
Yes.
means if the market is okay, if nothing's new, if everything is as expected with the data, with the employment, with this CPI, everything, then that shouldn't be a reason to trade. But if there's an anomaly like low, I don't know, low unemployment, low anything, or yeah, those anomalies, then that's a reason to start looking into the trade.
Yeah, pretty much. I'll go over it. We use an example. But the point I want to make in the whole conversation
Hmm.
is that I want to bias because I want to know what they're doing. I want to know what the banks are thinking, what is going on, right? And I use certain tools. Gold is resurging up because of fear and because of uncertainty, so it's a safe haven. I know that, but it can't go up forever.
Yeah.
Had levels that I believe it was coming back to, and I'm now trading those levels. So I was patient, and we talked about the barroom brawl. Don't trade until you're above it, and all that kind of stuff.
Hmm.
And someone will come back to me and say, "Well, you could have made a lot of money." Yep, you're right. But I am making a lot of money because now I'm trading it down because it's going down to what I wanted to do. And the thing that I want to point out is this: is that when you look at the macro and you look at the fundamentals, right, you want to get a bias of understanding of what they're doing, along with the monetary policy. So, what is it they're doing? What is it they're trying to achieve? Well, right now, the monetary policy are trying to reduce what?
Inflation to
Exactly.
2%.
Yeah. So they're trying to do stuff to get inflation down,
Hmm.
right? Right now, the market is showing that there is inflationary concerns.
Yeah.
Now, maybe not last week. There was, inflationary reserves are coming down because that's what Trump's going. Oh, no, it's come down. The prices aren't going up. Well, hold on a minute. It's only been 1 month. Chill out, Mr. Trump.
Yeah.
Right? Chill out. We need consistency. We need trend. Right?
Hmm.
Yeah. Okay. All right. So, first of all, we find that out. We go, what are we doing? The one thing, if you want to ask me the question, what is the one thing that I look at more than anything?
What
Do
is
you
it?
want to ask me that question?
What is the one thing you look?
Market sentiment.
Market sentiment.
What is market sentiment?
Uh, what is market sentiment right now? What?
The traders. The
Yeah,
traders.
like, how are they reacting? Is there fear? Is there greed?
Whatever they're doing, whatever they're deciding they're doing, they're the ones that are driving it. So if there's a decision, they're saying, hey, this is what we're doing, and we're doing this, and the price should go up. If it doesn't go up, it means that the investors out there and the traders out there, the millions and millions of them, are not drinking the Kool-Aid that you've just been presented. Does that make sense?
How do you find that out?
By the charts.
Price action.
You nailed it.
So market sentiment is price action.
Yes, it is. Pretty much. They use price action to recognize market sentiment.
Hmm.
Does that make sense?
Yeah,
So you use the technicals.
yeah.
Now, here's where it becomes very precarious,
Mm-hmm.
is the word I want to use, right? Because price action is double tops, double bottoms, triangles, ascending triangles, king's crowns, all these kind of patterns, candlestick patterns, morning star, evening star, lots of stuff like this,
Yeah.
right? The thing is that if we all know this, excuse me, everybody, no frog in my throat. If we all know this, and I mean all of us, that means not just the retail traders, the big traders, the bank traders, they know about price action, yes or no?
Yeah, yeah. They're
So if they
experts.
know about it, Do you think they can use it against us?
I guess, but how?
Well, of course. Yeah, they can, right? They do. This is why sometimes we see something setting up and a new retail trader go, oh, this is happening. I'm going to jump in. And then all of a sudden it doesn't. It goes the other way. Oh, fuck, what happened? Well, it didn't work this time.
Mm-hmm.
It didn't work out. Right? Do that again, see if it works. Do you understand what I mean? So we have levels again. There's that word. We have levels that we can create on our chart to protect us.
Mm-hmm.
I'm going to go over this just with gold because you're going to see what I'm talking about, right? You're going to understand. We will go over it. But in talking with the anomaly of fundamentals,
Mm-hmm.
right? If we talk about that stuff and we look about that stuff, look, sentiment, the structure of the market, before all this Trumponomics all happened and all the tariffs happened, what did I say about Meta and what did I say about Facebook and the S&P? What did I say?
Yeah, you said it was too overextended.
And it was coming down.
Yeah.
Did I mark off the levels that it was coming down to?
You did, yeah. I wasn't
Yes.
expecting, and I remember I asked you at that time where we were like about all-time highs, and I asked you, so you're bearish? And you say, yes, I'm bearish.
Yeah.
And I said, well, I thought I was crazy because for me, it's just because I don't have much experience. I've been looking at the charts for 1 year, and I don't know how to recognize the downtrends yet.
Yeah, I understand. Yeah.
So
But using levels would be a good idea.
yeah, but
Right?
I was very surprised.
A close. But here's the thing, right? Here's the thing. We have to be logical. Logic. You need to use logic. Now, I want you to think about this for a second. And this is the mindset shit that we have to all deal with, right? You're looking at a chart, you're hearing all these people, buy, yeah, look, all-time highs, everything's fantastic, rah, yeah, woo, right? And we listen to the Kramers, we listen to CNN, we listen to people we shouldn't be listening to, we listen to Zuckerberg pumping up his thing. No, you look at it and you go, look at that, up. Oh, I know the market doesn't just go up, it comes back down. It goes up and comes back down. What is the one thing that everybody wants in a market? Do they want it shooting up like this, or do they want gradual growth? What do they want?
Gradual growth.
Why? Because it's sustainable.
Yeah.
Yes?
Yes.
So when you get the anomaly in the charts, that's a signal to say, oh, we better start thinking about a correction.
Yeah.
Because what is that correction? Let's think logically now. Let's think you bought at an ideal time and it shot up over the last 3 months, massive growth, huge growth, and you made a shitload of money. Like millions. What are you going to do? What is the psychology in your mind telling you to do?
I guess if you already have that huge profit, then sell it.
You're going to take
profit.
Right? Especially if it's overextended.
Yeah.
Right? And this is the simple rules. Listen, I'm going to tell you this. These rules are not just... This is years of me looking and studying. And we've known each other for a while, and you know I'm an absolute fucking geek about this shit. I know. I put in my hours, I put in my time, because I constantly research and constantly reading, constantly looking, constantly testing, constant. And it's like, over those years, right, of doing that, of reading that shit, listening to that shit, has created this framework in my brain You throw me a chart. I don't care what kind of chart it is. I don't trade stocks. You threw Nvidia at me. You threw a bunch of this. That's coming down, dude. Yeah, that's going to do this. This is going to do this. Well, where's it going to? Well, this level, this level, this level. Now, let's go back to the Meta and the Nvidia and the S&P. Now, I was very honest, and I said, well, coming down. I think you said, well, how long is that going to take? 6 months, a year, and it happened in like 2 months.
Yeah.
There's the anomaly right there.
At the
There's an
beginning of
anomaly.
the year, you said it. You said it.
Yeah,
Yeah.
yeah. And it's like, okay, so we've got this anomaly. What do we have now? We have such a big drop, we don't have confidence. So is it going back up? We don't know. We don't know. So we have to be now trading with caution.
Yeah.
So what does that mean? That means, like you said, not trading, staying on the sidelines. Nothing wrong with that. Sometimes the best trade is the trade we do not place. Think about that for a second. The best trade is the one we do not place. Does that make sense?
Yeah, perfectly. It's a nice
Yeah.
quote.
And that's a thing to remember. It is like, because we're humans and we tend to chase stuff. We tend to go, oh, I'm going to get in on this. I'm going to get on this, right?
Yeah.
I lost a good friend, not to death, but we're not friends anymore, because when we had the Bitcoin craze and it went up to, I think it was 18,003 or something like that, and he's phoning me and he said, let's buy Bitcoin. No, we're going to buy Bitcoin. I said, no, dude, wait, it's coming down. No, it's going to go up further. I don't want to, let's do it. I got $10,000. I want to throw it in with me. I go, no, don't do it. Please don't do it. He did it and he lost it. And I had one conversation with him after that, and that was it. Now I haven't talked to him since. This has been like over 12 years now. So it's sad. But this is what happens with people, right? They get so tied up in this need and want, they don't understand that you just take a step back and look at it, and look at the overall picture, and say, my time will come. I'm going to go, the US dollar had great strength, right? Past couple of years, right? Huge strength. I knew it was coming to an end. It has to. I was going to say about 10 years prior, 10 years ago, maybe even longer, the euro was amazingly strong, ridiculously strong against the US dollar. The US dollar was actually, the Canadian dollar was worth more than the US dollar at that time. You can imagine that. I think it was
Wow.
around it. Yeah. So I
When?
think it was around a dollar for every US dollar. I think we got $1.19
When was
Canadian.
that?
Oh, this is maybe 10, 12 years. Actually, 50 years ago, before 2010 Winter Olympics.
I
Which,
remember US dollar, I think, yeah, around that time. The 10 Mexican pesos, it was 1 US, which it was great because 10 you can count by 10, right? Like 100
yeah,
pesos, $10.
yeah,
That was very easy.
exactly.
Now 100
Easy, right?
pesos, now 100 pesos is like, I think it's half or less than half. So it's like
Oh, wow.
$4.5 or maybe
Yeah.
$5. Yeah.
So the point I'm trying to make is that things go in cycles. We're in a cycle now. So the US is trying to create a cycle of a race to the bottom. Right? They want to get low. There's a lot of things going. It's complex. It is complex. I'm not saying I know everything. I don't. Right? I don't know everything in the whole sort of mash of how everything works. All I know is that, okay, this is what monetary policy the Fed's trying to achieve, right? This is the fundamental news supporting what they're trying to achieve. Is that off or is that together? And why are they doing what they're doing is because of this. So I got all that bias together. I have it in my mind. So that, let's say, creates a situation where the Australian dollar is supposed to be stronger against the US dollar. There's going to be some weakness. Okay, there's my bias. So I go to the charts and I go, okay, here's my bias. I'm looking for Aussie strength. So now I try and find and match. Can I find this situation on my charts on a weekly or a daily? Yes, I can. Look at this. Oh, wow. Yeah, this is spitting out. Do I have any news that's coming that could help me confirm this? Oh, let's see. Oh, I have unemployment coming out for Australia. Ooh, this would be good. What are they saying? Oh, they're saying they got this unemployment. So let's say, what? Remember, I'm looking for strength. So that means if they're saying they've got 20,000 unemployed, right? What do I want? More unemployment or less to get Australian strength?
Less unemployment.
Right. So what happens if they said 20,000 and it comes out at 14,000? Bingo. See what I'm saying? There's the anomaly.
Mm-hmm.
I'm still looking to trade the Aussie US dollar. I want to trade it, up there. I want it to go up because that's my bias. But I'm using the news to help it speed it up.
Mm-hmm.
Does that make sense?
Mm-hmm.
Right. So this is where we use it. So would you like to do an example? Should we just go to gold and just do this whole exercise on gold, or if you have some other things you want to talk about?
Well, you just one last question. When we were saying about Meta, that when it was very, very bullish and it was at all-time highs, and you said it's coming down, it's coming down, it's coming down. Now, I want to ask you, how would you handle, for example, this will be like a hypothetical. Do you say hypothetical? Like
Yeah,
a
hypothetical. Yeah.
hypothetical case. So let's say we see very bullish. I mean, sorry, we see very overextended Meta. It's super overextending, but then when we saw this, it was day after day that reached all-time highs. I think it was like over 10 days of all-time highs, and then you could say, oh, on the second day or on the third day that it reached the all-time high, you could say it's overextended, it's coming down, we're gonna sell. And then you sell, but then the next 7 days it just keeps going higher, and then it starts coming down.
Okay, so typically you've just explained how the market likes to work, because, and we could show this on a chart. When it's overextended, most people will think like me to sell it, right?
Yeah.
But I've told you many times, I don't sell willy-nilly. I need confirmation, right? We have a strategy called the 382, right? Using the Fibonacci number 382. But there's an exact pattern on how I like to see that work. From the Fibonacci swing, it goes to the 127, close underneath the 127, and trade it down to the 382. It doesn't work all the time, but it gets me a trade maybe to the previous high or to the 236, and I make some money. All I'm saying is this: you can have a bias, you can have these rules, you follow these rules, but you also have to realize that the market sometimes will not do exactly what you want it to do. So you have to have these rules in. Why do I have a rule of, oh, it's overextended, it's coming down? That rule is based on the fact that what goes up must come down. That rule is based on the nice, gentle movement of the market, a nice oscillation, right? We have one with the trend line we use. When there's a huge gap between the trend line and the price, I always look at it and say, this is going to start to come down.
To fill the gap.
But here's the thing. It could come down a little bit and then go back up again. One last push. Always that one last push, right? And that one last push could be setting up closer to a resistance level, could be taking out another high, could be anything, could be hitting a D extension. We talked about gold, and I said, I'm not looking to buy it, but it could go up. It went up and hit D extensions on not only the daily chart, but the 4-hour chart and the 1-hour chart. It had already hit a D extension on the monthly and the weekly. Those are high time frames. So to me, I'm looking for a downward movement. But the market was saying, no, we're going to push up further. the market pushed up further until it hit a daily de-extension, a 4-hour de-extension, and a 1-hour de-extension. All of a sudden, we've had all these de-extensions. Now, people say Fibonacci doesn't work. Bollocks. It works. It's mathematical. It's math, baby. Everything is math. So in this situation, the overextension was based on, I'm confirming this with mathematics. I'm also confirming that especially in commodities and stocks, all-time highs, typically, not always, typically when an all-time high is made, you get a 20% retracement. Typically. Google it, find out. This is real. It's a bit like a soccer match, right? And you got the Bulls and the Bears, and one scores a goal and makes a high because they want to make a high. The Bulls want to make a high, the Bears want to make a low. And the Bulls come in and they make a new high. They score a goal. What do they normally do after they scored a goal?
They start in the middle.
They all run back to the middle, right? This is a silly analogy, but I think it's helpful for people to realize that, that fucking makes sense, right? And it's like, we're just regrouping again. We just made an all-time high. Well, it'll dance around for a few days. Maybe it goes lower. Maybe it goes sideways. Maybe it doesn't do anything. Then all of a sudden, boom, it makes another new high. So, it's still going. No, chill out. Just made another new high. Why did it make another new high? Well, you could look at it and say, well, the banks, the big boys are in it. Remember, who can move the market? The whales, the big boys, the big investor banks, big banks. They've got a whole bunch of positions in, right? And they're saying, you know what? We want to sell, but we don't want to sell here. We want to sell up there. Let's push the market up. You don't think, and if you think that they can't push the market up, you're delusional. They can, and they do. And they push it up, right? Which is the largest investment bank out there, do you know?
Goldman Sachs?
JP Morgan.
JP Morgan.
Yeah, huge. You look and watch The Big Short, how much positions they had.
Yeah.
And they didn't bankrupt them.
JP Morgan.
Yeah, you would think, holy shit, billions of dollars. You're on the hook for billions of dollars. And they just turn around and renegotiate it and do some shit, and away they get, right? I think I forget which broker went bankrupt. I can't remember, but beside the point. I digress. So we know these things happens, but it's not like I keep telling you, stop jumping in, dude. Like Tesla is a perfect example. Am I looking to buy Tesla? Yes, I would be. And I showed you that base has been formed, right? Yeah. And I said, this is a good place to start thinking of buying. And you go, you buy it? No, I want to wait till I'm above here. I want confirmation, right? NVIDIA is a perfect example. What happened to your NVIDIA trade that you bought?
I closed it because I saw it was doing nothing. Right. I didn't lose any money, but...
Well, that's good.
Then it dropped. And then when it dropped, because of some bad news, I was just scared. I was being cautious. But I also thought it's a good buy. I just thought about it, but because of the bad news, and then I wasn't sure if I should buy. And then out of suddenly it just came back to the same level, like a 10% up, which is weird because there was no good news about it. It was just like after the bad news, it created a dip, so a buying opportunity, and people bought. And then it slowly went up to where it was, around $100.
Right. But there was a level there that I marked. I said, I wouldn't do anything until I'm above that level.
Mm-hmm.
Because you're just this is the barroom brawl area again, right? And I'm not saying you can't make money. You can. So you can pick a level, you can pick a low and say, well, if I'm above the previous high, I can buy it to that up to that level. And just do simple, small trades. Mm-hmm. If you bought and you bought a position and then it went from 100 to 110, you made a little bit of money, right?
Mm-hmm.
You can take that money and say, well, when it comes back down, I'll do the same thing.
Mm-hmm.
Or unless it closes above the high and retraces, I'll buy that. You have in these pockets of support and resistance levels, right? These pockets of supply and demand. This is what these pockets of bases that are formed.
Mm-hmm.
This is what we have. We have to say, yeah, I like this.
Mm-hmm.
But they're basically, we're creating ranges. We're creating ranges of support and resistance. And if you could just learn to just trade between support and resistance, you're not gonna have, you're gonna do really, really well. This is the basis of my trading right now, support and resistance. Yeah, I use Fibonacci, I do, but only I use Fibonacci. Say, oh, where I'm, oh, look at this. Wow, I'm actually targeting that the extension. I'm going to target that. We're above the B, we're above the 1, 2. Yeah, I'm going there. I'm not just doing this, I'm going to there. But it has to break that resistance first. Okay, I'm gonna watch carefully when it gets there. It may blow through it or it may not. Look how many levels got blown through by gold, right? Blew through a lot of levels, right? So what does that mean? Well, is it blowing through a lot of levels? Do those levels mean anything coming back? Probably, yeah.
Mm-hmm.
So we'll see. So if we can think support and resistance, if we can start thinking about levels. Am I in a safe level? Right? What if this gets taken out? What do I want to do? Well, if I want to buy, it has to go above a high, right? So I'm down here. I want to wait till it's past that previous high, and then I'll buy. So we have to be protected. But let's go back to the original question when the guy said to me about the fundamentals, right?
Mm.
And we talked about you saying, well, what's an anomaly, right? It's knowing what is the bias. What are they trying to achieve, right? What not what fundamental news is supporting that bias? What do we look at? What is the macro driver? Okay, so example, we talked about inflation, right? We
Yes.
talked about employment, unemployment. So they will tell you, if you remember a few months last year, they changed their bias from inflationary to the concern was employment, jobs. And the macro driver now is this. We need to switch. I'm not saying we don't listen to it, but this could move the market better than this, unless there's an anomaly on this one, on on the inflation. We see a big inflation. So shit, what's going on? And now you also now look. You see inflation numbers, the CPI, and these things raised. It says it's good for the currency. So if it's good for the currency, if you get a high number, what do you expect?
If you get a high number on what?
Of PCE or CPI that relates to inflation.
Was it's not good for the currency.
No, it is good for the currency if it's a higher one.
Yeah.
Because if it's good, the reason it's good for the currency is because it's saying, oh, the economy is good, prices are going up, the economy is rolling along, and it's good for investors outside the country to invest into the country. That's why, because they can get a better interest rate on them buying $1 million of your currency,
Mm.
right?
Okay.
So it's adverse to what we normally would think about,
Mm-hmm.
interest rates and stuff like this, right? It's just like, oh, now because it's going up, they're probably going to increase interest rates to stop the price going up higher because they don't want inflation. So if they increase interest rates, it's better for the investors because they're getting more money
Mm-hmm.
because they're getting a higher interest, right? Make sense?
Yeah, makes sense.
Right. But now this is the trouble with Trump and Powell, what we're going to talk about in a second. So what happens is we expect that currency to go up. But you know what's happening now is this happens and the currency goes down.
Yeah.
It's the reverse of it. Why? It's because we don't want inflation. We don't want it. We don't need it. It's now the driver is not, oh, it's good because the economy is good and we got this out. No, we need it to come down. The bias is it needs to come down.
Mm-hmm.
So when we see it go up, we go, oh shit, that's not right, right? Uh, so the currency will devalue. Does that make sense?
So right
It's
now, the focus is to cut the inflation, but
yes, yeah. How do we do that? How do we do that? We increased interest rates to stop people borrowing money.
Then that's the opposite of what Trump wants.
There we're going. Now we're getting there. So now we're talking about Trump and Powell and what is this battle, right? Never mind how he did it, but the reason is this: what does Trump want? Trump. First of all, let's talk about the tariffs. Why did he put the tariffs? What does a tariff do?
It's a tax basically on the goods.
Yes. So if there's a tax, who gets that money?
I would say government. Yeah.
Well, it is the government.
Yeah.
So it's a way for them to get money.
Mm-hmm.
That's it. Right? Don't listen to all this shit that they're talking about, because the lumber that Canada sends to the States is the ideal lumber to build housing.
Mm-hmm.
The lumber the States have is not ideal. So they're not going to change that, because they're going to get problems in 7 years. If they build a house, it's not going to be any good in 7 years, because that wood is not good. So they need our wood.
Mm-hmm.
That's it, right? So in the interim, so a company is going to say, well, I'm not going to buy this other shit. I have to buy this stuff. So, okay, I'll pay the tariff for the time being. So the prices are going to go up accordingly, because I had to pay. So the consumer will pay. The consumer will pay anyway. We do. We're just suckers like that. We're going to pay.
Yeah. What else?
You
What
know
else can you do?
what else can he do? Exactly, right? So the iPhone goes up to 1,600, man, no problem. Goes up to 2,000, man, no problem. Goes up to 2,200, no problem. You buy it. You don't care. So, at the end of the day, it's a way for the government to make money so they can pay for programs. They've wiped out all the social programs.
But
They're not paying it because they don't have the money, because they're in so much debt, huge debt. We showed the debt clock a couple of episodes back. It's nuts,
30,
right? So
36
they,
trillion.
yeah, so they need to reduce that. How do you reduce that? By getting money. Where do you get the money from? Tariffs. So let's go now. What does he want from Powell? Well, if you have huge debt, what do you have to pay on that debt?
What do you mean?
Well, you have a debt, right?
Yeah,
Right.
you pay the
So if
minimum.
you have no, you got interest on that debt. You got to
Uh-huh.
pay. You got to pay. That money's just not. You're not a negative. You have to get the money from somewhere. It's not just there. There's interest payments has to be. There has to be a system. When they create money, it goes into the system, that there is a calculation of interest that goes to it. Otherwise, the system just fails. So there's interest rate. There's interest payments on it.
Mm-hmm.
So now all of a sudden, Trump said, he said, we're paying millions and millions and billions of dollars in interest. So if the interest rate came down, they're not paying as much interest. So that's another thing to think about. There's a lot of things like this. So that's why he wants it down. I also think it's political too. I also think he's blaming Powell because of the situation they're in, because I think he underestimated the crash that he was going to cause, in my opinion. Right? It's just conjecture. It's just, look, a lot of these things, guys, is my opinion. Right? I don't have to take it from you. You do your own research, right? I'm just an old guy just yapping away, just telling you what I think. And that's all I am. But to me, it makes sense. It's like, oh, I got this massive debt. How do I get rid of it? I got to get money. Where do I get money from? Tax the rich? Oh, fuck no, we don't want to tax ourselves. Oh, heaven forbid. Well, what do we do then? Well, let's just tax the general population. There's 300 million of them, and there's only 10 million of us. Why would we tax ourselves? No, tax the large number. This, tariffs. Boom, boom. That's an easy way. We're blaming the other countries. No, I'm just thinking logically here, right? That's what I'm doing, right? And whether I'm wrong, and that's okay. But the generalization of what tariffs are, they're taxes. And every country does it. Why? To bring money in, to pay for social programs. That's all the reason they do it. There's no reason to do it. They do it. And if you say, oh, they're protecting their industry, okay, yeah, you might be right. So Canadian oil has oil, right? And they don't want to, have another country deliver oil to them. So they put a tariff on it, maybe, right? Protecting the industry. Salmon is another one, right? So yeah, so you can do that, but it's mostly Dairy is another. Okay, New Zealand with dairy and stuff like that. Do they want to bring dairy into that country? No, they probably have enough, right? So the point is that you can add tariffs to that, and usually a lot of the tariffs are not set exponentially. They're set. Oh, hey, this
Like
tariff you'll pay
customize.
this, right? If you increase, you pay more tariff. If you increase, we pay a higher tariff. Does that make sense?
Yeah.
So usually it's a base and then plus a percentage. So it's all about making money. It's all about grabbing money because then the government can come and say, "Oh, let's build our infrastructure now. We got money. Let's pay off the bit of the debt that we have, so we don't have so much." This is what I believe the tariffs are, and it'll all go away in a few years. You'll see. It'll all settle down. It'll all go tick along nicely. Blah blah blah. And when the market is at rock bottom, what happens?
It just can go up.
Buy, 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 buy.
Yeah.
Right? And that's it in a nutshell. So this is the period we're in right now. This is what we're in. So Powell is a very straightforward, honest guy. He has to be honest. And he says it's going to be difficult to exercise proper monetary policy because we're not sure what the tariffs are going to create, because normally tariffs will create an inflationary concern, right? Because people are going to pay higher prices. And that's a fact. That's not just him doing this, that's factual, right? So he says it. Well, Donald Trump doesn't like it. What the fuck? Why do you say that shit for? Right? Because Donald Trump is look, so I'm doing this here, and you're not seeing what he's doing with his right hand, right? That's what he does. So when you look at Powell, he's just being upfront. He said, "Well, we're not really certain what the policies of the administration are." Do you know? Do we know? We don't know. We're confused. So Powell's confused as well, and he said it.
Yeah.
So what's he telling everybody? Well, the Fed, in his words, is having a cautionary approach. Proceed with caution. So if that's the case, I know this is a long-winded way to me to get here, but if that's the case, so what is the bias for us traders right now in this environment?
Be
What should
cautious
it
as
be?
well.
100%.
Yeah.
100%. And that means lower positions, don't overextend, take your money off the table, right? Just if you really want to trade. There are some people out there that can't stand not being in trade. Sometimes I'm one of them. And sometimes I go 2 weeks without a trade. It just depends what mood I'm in, right? So I think it doesn't have, there's no sort of, I don't know, hurry for me anymore. There's no sort of, I've got to get in. It's just whatever. So I think we have to be cautious. And that's what we have to do. There you go.
Thank you. We are 50 minutes in. Do you want to take a look to the charts? Maybe we can check gold. What are your levels?
Okay, let's do that.
Don't forget to share the screen.
I'm doing it first, actually. You're going to be very proud of me.
Good job.
Can you see my screen?
It's charging. Okay, yeah, now.
Okay, do you want me to make it bigger, or you need me to do anything?
It's good, it's good. You're good.
Yeah, okay. So I believe this is where we were last week, right? This is where we were, February 15th, is that correct? 16th. No,
We were 19.
At
Last week we were. It was 19.
This one here. Okay, so let's go back to the weekly. So I was looking at this level here, right? I said, okay, we have this level here, And this is just opened, right? And well, closed. Sorry, we're waiting for this to open. And if you remember, I use this as the high. I should have saved the last chart. I'll have to start doing that. So
Yeah.
what I did, I said this is the no trade zone unless we're above it, right?
Yeah.
But my bias was to the downside to this 50%, right?
Mm-hmm.
Because this is last week, we were the week before. Yeah,
Mm-hmm. Yeah.
remember? Right? And I'll mark this off here, do it in blue. And I had another one here. Okay, do this correctly. I'm going to put this in red because that's the no trade zone. Now, if you remember, I said we should not trade unless we close above here, right? And you can clearly see, yes, this did spike up. Not going to lie, it spiked up crazy,
Mm-hmm.
right? But I didn't want to be there because can you imagine you being here and you got up to there, you didn't do anything, come all the way back again, right where you were. So you wouldn't have made any money. But if you were smart, you could have got there and closed out. But I know a lot of people were trying to get to 3,500,
Mm-hmm.
and it didn't get there. Look at that for 3,499. Holy shit! Right. So just so we can be on the same page, why am I looking at it to come to the downside? Uh, Number one is here's my fib sequence, and you can see way back here was where the D extension got hit. Way back. Look how far it had gone up. And this is a big push up here, right? A
Mm-hmm.
huge push, right? And this is a weekly chart. And you say, well, no big deal. I don't understand why you're kind of thinking about that. Because look at the market before. Look at it, right? Even from down here, like up, down, up, down, up, down. Oh, big anomaly would come back, right? This is a big move. Come back, up, down. Nice, 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 nice. Oh, big drop down. Okay, big correction up, right? This is a good way to trade here. Up, down, up, down, up, down, up, down. It's kind of nice, right? And even this is not so bad here, right? Oh, a little push here. And then he hits this D extension, and then he just goes crazy. Right? No structure, very little retracement. Made a high, right? Made a high, made a high, another high. Right? Make sense? Let's look at the monthly. Are you following?
I am.
Okay. And on the monthly, get rid of this. So we can start down the bottom here. This broke, so we have to start here. So here's our monthly. Look, we're at monthly. Look at this.
Mm-hmm.
Same. It hit there, came back down, and just shot up. So we've had, in a month, from when this D extension hit, we've had 1, 2, 3 months of solid movement up.
Yeah.
And even from here, look at this B. Look at this from where this area is. This nice and gentle, nice and gentle. This is quite the move up
Yeah.
too.
Skyrocketed from
Yeah.
from last year.
So look at previous D extensions. Now I know this has ended up being broken, but this Fibonacci D extension worked out. This Fibonacci D extension worked out. Came back, made another one, worked out. Came back, made another one. Came back, didn't work out. This one worked. 1, 2, 3, 4 worked out, which means they went up, retraced, and then went to their target. Went back down, went up, went to their target. 1, 2, 3, 4 times. The fifth time it didn't work.
Can you
And it
explain?
started
Can you
again.
explain that why it went up, retraced, and then went to the target? Why? Why do you say this?
Because it's a swing.
Yeah.
It's a low to a high, a retracement, and an extension. These are swings. So if I take that off, right, this is a low here, right?
Yeah.
So I can simply, let's do this. I'm looking for a high, but not this high, because I need at least 5 candles. So my high will, right here. Is that higher than that? Yeah. Does it have 2 candles to the left? 2 candles, maybe hard to see for you guys. Sorry, hold on. There we go. Oh, I got the automatic thing on this one. Well, I put it on to make it easier to draw.
Oh yeah.
So I didn't have to keep doing it. It's not obeying me now. Hold on a sec. There we go. Let's turn that off. Okay, let's see. Yep. Trying to make it easier for you to see. Right. So we see these retracement, and then you got this one to here. Let's have a look. 1, 2. So this one here. I should join this up here. Hold on a second. I'm going to get rid of this. This sucks. Making it harder. Let's get rid of that. Okay. So let's do this again. All right. So from here to here. Right?
Mm-hmm.
Here, then it retraces down to here. Stands up. Retraces. Then it has a big push up. So you see how small these are, right? They're not as big, right? Not as big. This is a monthly, by the way. This is a month, right? And all of a sudden it has a big push. So this was nice and steady. Nice up, down, nice, beautiful, right? It is stable. Would you call that stable? I would call this a stable. It's moving up, and that's fine, but it's moving up in a stable scenario.
Yeah, it looks good.
Would you agree?
Yeah.
This is not. This is now coming. Oh, wow, this is a big move. We expect a retracement. We got a retracement. What is this retracement, do you think, from here to here? Well, let's measure it. From this, actually, it probably be from here. So let's go from here to here. Wow, surprise, surprise. Look at that. Just under the 50%. It retraced 50%. Are you surprised? Shouldn't be. Went up, tried to come back again. It kept going up, kept going up, kept going up. Look at this. Not 50%. Not 50%. Not 50%. 50%. Filled. Went back up. Came right back down. Filled to 50%, filled to 50%, filled to 50%. I will keep banging on about this 50% until I go to my grave. But you see how this came back after this big move from there. Came back. Now it's settled a little bit again. Up, down, up, down, up. The trajectory's got a little steeper, but it's still doing that nice up, down, up, down, up, down, up, down, up, down, up, down, correction from that big move up. Now it's moving down. Down from the high to the low, up, 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 down, up, down, up, down, up, down. Hold on a minute. We got this correction. Okay. Up, down, up, down, up, down, up. Oh, look, fulfilled. I could do this for days. And I just wanted to see how that really works. Now, I know you're going to say, how do I do this? How do I trade with it? You got to have rules. Got to have rules. And that's it. Develop the rules to go with it. But anyway, we're getting off subject here. So this also hit a de-extension. So the expectation is, because of the higher time frame, I'm expecting it to come back. However, what I forgot, well, I didn't forget, I just didn't take much notice of it because I thought, well, the monthly and the weekly are on the higher time frame, so that's the one I listened to. Now, nothing worked against me because I had a bias to sell, right? I had a bias to sell, but I didn't include this possible de-extension to be filled on the daily. In actual fact, I think I did, but I said, don't trade above the high because there's a daily de-extension. It's the 4 hour and 1 hour I did think about. So this market, this is where we were. It came back to hit this 50%, right? Was short from this one first, right? It didn't hit it, right? You see that, right? This is where we were, right? I said, don't trade above there unless you have a close, right? But we have a de-extension. So I wasn't interested in buying. I was interested in selling. So no pain for me, but people can say, well, you missed out in this. Yeah, okay. So I missed out in that. So what? This trade from here up to here is a lot less than the one I got from here down to here. Right? So I'm not worried. And you have the wrong mindset. This is what happens with a lot of traders. They say, oh my God, look at the move you could have had. You left all this money on the table. Now let's just say I sold and I followed my plan, how I like to trade, and I entered and I made $3,000. That's a good trade, is it not?
Yeah, it is a really good.
Right. But let's say the move up was another $3,000. So a trader with the right mindset will say, well done, you made $3,000. That's awesome. You followed your plan and you didn't lose any money and it was great. A trader with a bad mindset said you should have bought it and made it $3,000 and then sold it on the way down. You would have made a lot more money. You actually lost out on $3,000. Because, why? Because a new trader wants to be able to take as much money out of the market they can. Now, I'm talking retail traders here. Now, I'm pretty sure prop firm traders, and there's, trading firms out there that really push their traders, and they probably had stress, and they probably were buying and all that stuff. That's not the way I trade. That's not the way I want to trade. I don't want to work for a prop firm. I don't want to work for somebody that's too high, stress. That's why traders don't last, because they get too stressful. I don't want to trade like that. All you had to do is wait for the opportunity to come to you. The opportunity was below this de-extension here. And here it is, right there. Broke, check, sell, boom, to the blue line. The blue 50%, boom. Went back up, still in it, come back down to the blue line. Where am I going now? Well, I'm going here, but I'm also going here. I'm also, there's more. But let's look at the 4 hour. Are you following this? Are you following
I'm here.
what I'm talking about? Yeah? Okay. I want to show you something. Remember we talk about patterns?
Yes. This
Right.
is Head and
Look at
Shoulders.
Yes. Well, actually, I say this is a king's crown. And I'll tell you the difference between a head and shoulders and a king's crown in one easy lesson. This up here and this here could be a shoulder, right?
Mm-hmm.
This up here could be the head, right?
Yes.
This can come back and be the right shoulder.
Mm-hmm.
Sorry, the bottom,
Neck.
the neckline, right? And then this comes up and is the right shoulder, and down we go.
Yes.
Now, you see this low right here?
Yes.
This low took out the previous low.
Yeah.
This is a higher probability than we normally draw across the lows to get a neckline, right? So you draw across here, right? And you'd have a low just here, maybe, but this broke quite deeply, right? So I trade this differently to a head and shoulder. So how would you trade this? Typically what would happen, you would wait till this neckline breaks, right? Tests, and then come back down again and trade it. Well, you've missed all this, but this is how I trade this. And you're gonna see exactly my whole system come together. I will draw a trend line on this. And by the way, I did not trade this. I was already in this trade from up here. I didn't worry about this retracement. I didn't worry because I believed that this was coming down, especially when I saw this, and even when it went up, I believed that I was still coming down. So I believed in it. So I didn't. I was already in the trade. I wasn't about to place another one. So here's what I do. Trend line. Wait for the break, retracement, got it, right back to the trend line, not quite 50%. Sell right here, boom shakalaka. But where's my target? Well, it could be here. But look what we have here. High to low, retracement, extension. What is this? It's a swing. Yes, you got a swing before. You don't need to worry about this. Here's a swing. Let's put a Fibonacci on it. High to low, retracement. There's the extension right down here, right by another monthly 50%. We don't have to look for patterns on the left side. All you had to look at and realize this is a swing being formed. How do you know it's a swing being formed? The swing broke the previous low. The swing retraced, right? It retraced to a level. Look where the level is. Look at this level. What is this level here? A simple close and open. Look, even on a 4-hour. Look, rejection. Rejection once, rejection twice. This is the important part here. You could have traded this here. You could have said, look, this broke here, went back up. I could have sold right on that low right there. Boom. But confirmed by using a trend line is better. That's good. Confirmation, trade down. But because I have got what I call experience and know that I firmly believe that this swing is going to work in my favor. I firmly believe that gold is on a sell right now, right? So I'm selling it down. And I stayed in the trade. And I'm still in the trade. And I'm going to keep going. And if I stalled here and it starts coming back up again, I'll probably get out and take my money and just wait till it settles and closes below this black line here, right? With these, look at these highs, right? And wait till it closes, retrace, and then I'll trade it down to this level here, which is taking care of this D extension. The levels work hand in hand with the Fibonacci, work hand in hand with the swing, hand in hand.
Oh,
do you see that?
Yeah, I see.
Pretty cool, right?
Yeah.
And let's. I want to sort of add to my thing on the Fibonacci with the 1 hour, why it went up. A lot of the times people want to know why things happen. I'm going to tell you this. You shouldn't worry about it. It just happened. Let it go. We get too consumed. Why did that happen? Why did this do this? It just did. See, this was the D extension here, right? See that? So we were just below that line right there. Just it hadn't quite hit it. So then it came back and then finally hit that D extension on the 4 hour. and then kept going. Why did it keep going? Because it made a new swing,
Mm-hmm.
hit the B, come to the 236, is going up to the 127,
Mm-hmm.
right? Coming up to the 127, going back down to the 382. Now I'm going further, but it's setting us up. Let's go to the 1 hour. And if I hit the 1 hour, you'll see there was another de-extension there. I don't think that's right, to be honest. I think I have to go a little further down. Yeah, this is the problem with the 1 hour. Okay, let's try this one. Nope. Can you imagine? I used to do this manually. Fuck. I can't imagine how I managed to do that. Crazy, eh? Thank goodness for automation. Look at these fibs. Beautiful. Beautiful. Okay, did that break? Yeah, it looks like it broke. Looks like here, yeah. This one broke. Oh, looks like I did have it right. Okay, this one. Okay, I think this was a de-extension here. Maybe I'm wrong. Maybe it did have a 1 hour to go to. So maybe I was playing off of this. Can't remember now. I have to take snapshots, I think, show you guys. So I can't remember what I thought, but I had a thought in there. I think this came down, went back up to the 127. I waited for it to come under the 127, say, yeah, it's coming down to this 382 right here. And of course, it just kept going. So this ended up being a good trade. But I wasn't trading on the 1 hour. I was trading on the premise of the levels. So you can see the level back here where we were, right here, right? So once this came back into this level, you see where I'm talking about, these two red lines?
Mm-hmm.
Yeah. So once it came back from this movement, which is a good movement, I'm not saying it isn't, right? This is a really good movement here. Boom, really good. I hear you, right? But I'd already made a bias that I wasn't buying, right? Even though I was above there. And I did say, wait till you're above and test. And you got it. You got the test. You could have traded. And it would have been good above that high. Boom, boom. Nice trade. Would have had a nice trade. Beautiful. I acknowledge that. But not for me, because my bias was to sell. And I waited till it came back to that level, because this is a level where the market could have settled here and said, no, I'm going back up. And it didn't. It closed down below. So then I traded down. Going up, and it was still in it. Now I've come back down to here, hit this level again. It's going up a little bit. Where's it going? Probably to here. Now they maybe back down. I don't know. We'll see. So
We'll
there
see.
you go. Hopefully that makes sense for everybody. But you can clearly see this level I marked off, right?
Mm-hmm.
How
It was an open and
collects.
close, yeah.
Yeah, look at that, right? And this didn't even reach it. It reached the bottom one, went down. Bottom one, went down. So even if it goes up again, backside of this trend line up, another opportunity to sell.
Yeah.
Now, if it breaks above it and closes above here, to probably buy.
Mm-hmm. All right.
So there you go. All right, I think we're good.
Yeah, we're good. Thank you.
Well,
Thank you so much for the knowledge as well. Yeah, a lot of swings.
that's what it's all about. Trade the swings.
Yeah.
Yeah. Got to be patient. That's it. Patience is a big one, right?
Yeah.
Be patient, trade the swings, and you'll be all right. All right. Well, thank you, everybody. Appreciate your time, and we'll see you next week.
All right. See you
Have a
next
good
week,
one.
Ashley. You too.
Take care. Bye.